One wrong move after your mortgage is approved and the whole thing can fall apart. You find the house, you make the offer, the seller accepts, and you are excited. You are planning, you are ready. And then, right before closing, the lender pulls updated documents. Something changed, a new car loan, a job switch, a large deposit with no explanation, and the approval you thought you had gone. Nobody warned you. So, this video is the warning. Here is what most people get wrong. A mortgage approval is not the finish line, it is conditional. Your income, your debt, your credit, your down payment, all of it still matters until the money actually funds and the keys are in your hands. And here is something worth thinking about before we get into the mistakes. The length of your closing matters more than people think. A 30 to 45 day closing gives you a short window. Less time means less exposure. But if you are sitting on a 90 to 120 day closing, this is 4 months of runway for something to go sideways. The same mistakes we are about to cover carry more risk the longer that window is open. Lenders sometimes do a final check right before closing. So until that moment, the file is still live. 3 mistakes that kills deals at this stage. So let's go through them. The most common one, you open new credit card or make a big finance purchased after you apply. You get approved and you think, perfect, time to go get that truck for the new driveway. 0% financing sounds harmless. It is not. When you take on a new car payment, a new credit card, or financing of furniture or appliances, you change your debt to income ratios. The lender approved you based on a specific snapshot of your finances. You have now changed the snapshot. That $700 monthly car payment shifts the math. And in mortgage underwriting, different math can mean a different answer, especially if you were already close to your maximum approval, and it is not always something as obvious as a car. Let's say you just bought a house, new build, that comes with no appliances. Now you go check out that Sub-Zero fridge or Wolf Range or Miele dishwasher. The store offers you 6 months, no payments, no interest. Sounds completely reasonable. You need the appliances. The deal looks smart, but the financing agreement shows up on your file. The bank sees the new obligations, and when that payment eventually kicks in, it gets factored into your debt. The math now, boom, changes. Even co-signing for someone else, maxing out cards and on moving cost, financing anything on a payment plan, all of it counts. Lenders look at monthly payments, not just balances. And remember, if your closing is 90 or 120 days out, you have a long window to make one of these decisions without realizing the timing is a problem. The rule is straightforward. From application to closing, do not open new credit cards and do not make large financial purchases without talking to your mortgage professionals. The person selling you the appliance wants to make the sale. The person arranging your mortgage wants to get you into the house. Very different priorities. This one surprises a lot of people. They think, I got a better job. Is that not good? Sometimes, but not always mid-mortgage. Lenders want income that is stable, verifiable, and predictable. A sudden job change, even a higher paying one, can trigger a full file review. New employment letters, new pay stubs, confirmation you are not on a probation, confirmation the income structure is acceptable. If you shift from salary to commission or from employment to self-employment, that's a major issue. A salaried employee with 2 years of consistent income looks very different from someone who just started consulting last week. Even if that person expects to earn more, lenders do not lend on expected income. They lend on documented income. And it is not just about choosing to leave. If your company announces layoffs, restructuring, or your hours gets reduced, the lender may want to re-verify your employment. You did not make that decision, but it still affects the file. If something like this happens between approval and closing, let your mortgage professional know right away. Do not wait. Hope it does not come up. The rule is the same, whether the changes was your choice or not. Keep your employment stable until closing. After closing, take the promotion, take the business, make the switch, but do not surprise the lender before you get there. Another mistake, moving large sum of money around without a clear paper trail. You might think, it is my own money. Why does the lender care? Because they have to verify where your down payment came from. Every large movement may need to be explained and documented. Receiving money from family? Yeah, sounds great. The lender will likely need a gift letter and bank statement showing the funds leaving their account and entering yours, then transferring from a business account. They will ask whether those are personal or business funds. Moving money between accounts to stay organized? Now you may need statements from all of them. And depositing cash? That one is genuinely no, hard to document. None of this means you cannot move money. It means every significant movement needs a proper trail. And when you are close to closing, building that trail under pressure is stressful. Before you move large funds, ask your mortgage broker how they want it handled. So here is where we land. Do not open new credit. Do not buy the car. Do not finance the appliances. Do not change jobs without checking first. Do not move large sum of money without a proper paper trail. And when your broker asks for updated documents, send them the same day. It does not mean something is wrong. It means the file is moving, and delays right before closing creates unnecessary pressure. A mortgage approval is not just about getting approved once. It is about staying approvable until closing. And the longer your closing window, the more disciplined you need to be throughout that entire period. Losing a home at the finish line is painful, and most of the time it is preventable. If you are under contract, about to apply, or buying anywhere in Burlington, Oakville, or the GTA, drop your questions below. I will make sure you know what to avoid, what to prepare, and how to get to closing the finish line without any surprises. Because getting the approval is exciting, but closing, that is the part that actually matters. My name is Roshan Basnet, and I will see you on my next video.